Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. In the previous videos, we have understood the concept of royalty account and preparation of ledger accounts and journal entries in the royalty account. And we have solved PYQs also, that is 6 marks questions we have solved. Let us solve today the section C question. Okay, from 2022 question paper, question number 9 we are going to solve. Bharat Company obtained a lease of mining land from Srihari at a royalty of rupees 25 per ton with a minimum rent of rupees 2,40,000 per annum. Loss due to short working for each year can be recovered during the subsequent 2 years. The output were year output first year 7,500, 8,000, 10,000, 11,000 and 11,500 in the fifth year. Prepare the following ledger accounts in the books of Bharat Company: royalty account, short working account, and landlord account. In previous video, I have solved the questions related to the ledger entries and journal accounts. You can watch those videos for your more understanding. Let us solve this question. First, you need to prepare the analysis table of royalty. So this is the format for analysis table: year, output, royalty, minimum rent, surplus, short workings, occurred, recovered, irrecovered, and payment to the landlord. Here, royalty will be given. Output are given in tons. Royalty is rupees 25 per ton. Minimum rent is the fixed rent or a dead rent. When you will call surplus, when the royalty is more than the minimum rent, then it is called as surplus. Short working, when it occurs, when the minimum rent is more than the royalty, then short working occurs. And when you have surplus, you can recover with the certain conditions specified, a recovered, whatever amount you have recovered, and payment to the landlord at the end. Now, how many years is given? 5 years is given, right? Output, it is 7,500, 8,000, 10,000, 11,000, 11,500. And royalty is 25 per 10. You are multiplying output with the royalty. 7,500 into 25. It is 1,87,500. Second year, 8,000 into 25, 2 lakh. Third year, 2 lakh, that is 10,000 into 25, 2,50,000. Fourth year, 11,000 into 25, 2,75,000. Then fifth year, 11,500 into 25, 2,87,500. 87,500. Minimum rent. It is fixed rent or a dead rent. It is going to remain same for all the years. That is 2,40,000 given in the question. Okay. 2,40,000 for all the years. Now, surplus. Surplus is when royalty is excess more than the minimum rent, then it is called as surplus. Here you can see there is no surplus, but short working is there. That is, short working is occurred because minimum rent is more than the royalty. So what is the short working amount? 2,40,000 minus 1,87,500. 52,500 is the short working occurred. Then there is no recovery, there is no recovered. And landlord, see, you will assure a owner that you are going to pay when output the royalty is less, some fixed guaranteed amount you are going to pay. That guaranteed amount is called as the minimum rent. So now you compare to royalty and the minimum rent is more than the royalty. So this minimum rent you are going to pay, that is why it is called as minimum rent. The guaranteed amount 2,40,000 you paid to the landlord in the first year. Then second year, again there is a short working. 2 lakh and 2 lakh 40. 2 lakh 40 minus 2 lakh, 40,000 short working occurred. Which amount you are paying to the landlord? 2 lakh 40,000. The minimum rent amount you are going to pay to the landlord. Then third year, there is a surplus. Royalty is more than the minimum rent. What is the surplus amount? Surplus amount is 10,000. And when the losses occurred, you can recover in the subsequent 2 years. What do you mean by subsequent 2 years? That meaning is, if the short working occurred in the first year, you can recover in the subsequent 2 years, that is in second year and third year. If the fourth year there is a surplus, you can't recover because the condition says in the subsequent 2 years. So the first year short working you can recover 10,000. What is the total amount? 52,500 is the occurred amount. Out of this, recovered is 10,000. The remaining balance is recovered, 42,500. In 2,50,000, 10,000 is recovered. So remaining balance 2,40,000 paid to the landlord. Then in the fourth year, again 2,75,000 minus 2,40,000, 35,000, right? 35,000 surplus. 35,000 you can recover. For which one you can recover? For 52,500 can you recover? No, because subsequent 2 years. So you can't recover for the first year short working. You can recover for the second year, because for second year you can recover in the third and fourth year. This will be your subsequent 2 years. Out of 40,000, 35,000 is recovered. What is the remaining balance? 5,000 is irrecovered. And what is the landlord payment? 2,75,000, 35 is recovered. 2,40,000 you are paying to the landlord. Okay, payment to the landlord. Now in the fifth year, there is no surplus. Still there is a surplus. You can't consider it because you can't recover it. Whatever there in the royalty column, you are paying to the landlord. That is 2,87,500. This is analysis table. Our analysis table is done. Now let us prepare the ledger accounts. In the books of Bharat Company royalty account we are preparing. What is the entry for the royalty account? The entry for the royalty account is, you will debit royalty account debtor, short working account debtor to landlord account. This is the entry for the due entry, right? You are passing the entry. Now in the royalty, with royalty you have credited the landlord account. That account in ledger you are debiting royalty account debtor to landlord account. Landlord account. What is there in the royalty column? That amount you should record in the ledger account. 1,87,500 you are recording. And the royalty amount is transferred to the production account. What is the entry for production? Transferring production account debtor to royalty account. Production account you have debited. Opposite of journal is ledger. Here you are crediting by production account. What is the amount? 1,87,500. You are closing for the first year. Every year you need to close the book of account. 1,87,500. Now for the second year. Second year you are debiting landlord account. Landlord account. What is there in the royalty column? 2 lakh. This 2 lakh you are going to record. 2 lakh. Second year, by production account 2 lakh. Okay. Close for the second year. Now third year. Third year with royalty. What is the entry? When you have short working, that is surplus. The surplus when you have, the entry is royalty account debtor, to landlord account, to short working account. With the landlord, one more account you have credited, that is short working account. The 10,000, because what is there in your royalty column? 2,50,000. This 2,50,000 out of 2,50,000, 2,40,000 you are showing in the landlord account. This 10,000 is going to the, you are crediting. You have a debit of short working that you have recovered. See, short working recovered is not an income. It is just an adjustment to the short working occurred. Short working occurred. Okay, for the adjustment. This 10,000 to landlord account 2,40,000, to short working account 10,000, transferring to which account? Production account. Production account 2,50,000. Close the book of account. 2,50,000. 2,50,000. Fourth year, to landlord account. How much it is there in the landlord? 2,40,000. To short working account 35,000. Your total royalty is 2,75,000. By production account 2,75,000. Don't by heart. Understand. If you understand, you will never make mistakes. That is why you should understand why you are debiting, why you are crediting. Okay. Last year, in the fifth year, there is no short working, only payment to the landlord and transfer. Landlord account 2,87,500. By production account 2,87,500 total. Right? Next, which account we are going to prepare? After the royalty account, understood the royalty account, right? Landlord account, you are debiting. Why you are debiting? What is the journal entry? Journal entry you should remember. Okay, if you know journal, you will never make mistakes in ledger accounts. Okay. Landlord account 1,87,500, whatever there in the royalty column, that amount only you are showing in the royalty account. Keep that in mind. Then next we are preparing the short working account. Let us prepare the short working account. Debit side, credit side, date, particulars, amount, date, particulars, amount. If you see, while passing the due entry, you are recording the entry royalty account debtor, short working account debtor, to landlord account. Right? With the landlord, the account which are affected is short working account and royalty account. Royalty account we have recorded. Now the remaining is the short working account. With short working you have credited the landlord account. So here you are debiting the landlord account to landlord account, and amount which you are recording is whatever there in the short working column occurred, 50 to 500, that you are recording 50 to 500, and this balance will be carried down by balance, carry down the credit side 50 to 500, closing the first year account 50 to 500, and whatever you have carried down you should draw down for the next year. To balance brought down 50 to 500, and second year to landlord account, what is there in the short working occurred column, 40,000, that should be recorded, and second year balance is by balance carry down, it is 90 to 500, 90 to 500. Okay, now in the third year it is, you don't have occurred, you have recovered. So when it is recovered, you can see in the royalty account you have debited the short working account. So in the short working account you need to credit the royalty account. Third year by royalty account, what is there in the amount column, recovered column, this 10,000, that should be recorded 10,000, and balance is by balance carry down. First we will draw down third year to balance brought down is 90 to 500 minus 10,000, 80 to 500 is the balance carry down. Third year we are closing the account. Fourth year, first balance brought down to balance brought down 80 to 500, and in the fourth year also we have recovery 35,000. So which account you are crediting? The royalty account. By royalty account 35,000 by balance carry down, it is 47,500. You can see here 42,500 plus 5,000 is 47,500. The same balance you are going to get in the last year, the recovered amount in the balance. That's it. Only for 4 years we are recording, because fifth year there is no short working. Right? Account is closed. Let us prepare now the landlord account. For landlord account, the payment entry, due entry is royalty account debtor, short working account debtor to landlord account. The payment entry is, what is the entry for payment? Landlord account debtor to bank account. Okay, so first here you can see in the royalty account you have debited the landlord account. So in the landlord account you are crediting the royalty account. By royalty account, what is there in the royalty column? See here you can see 1,87,500. This amount only you should record, 1,87,500. And when it comes to short working account, first year you have landlord account 50 to 500. Here you have debited. So short working account you are crediting by short working account 50 to 500. 50 to 500. This is for the first year. And what is the payment entry? Landlord account debtor to bank account. So bank account you have credited. Here you are debiting the bank account to bank account. What is there in the landlord column? It is 2,40,000. 2,40,000. If you add these two also you are getting. So your debit and credit are equal. Account closed. Right? 2,40,000. Then second year. The same entry repeats by royalty account. Royalty account. What is the amount? See, landlord account 2 lakh. 2 lakh. And in short working account. Short working account. What is the amount? Landlord 40,000. 40,000. And in bank, to bank account. Payment column, what is there? 2,40,000. 2,40,000. Tallied? Your account 2,40,000. 2,40,000. Now in the third year, by royalty account. Royalty account. What is there in the landlord? It is 2,40,000. 2,40,000. And here in short working, you are not recorded third year landlord account. So you are not showing the royalty account. And why we are not showing is royalty is an asset. That is why we have debited. And for debited, we have adjusted the credit entry. That is why again we are not showing. Here you can see what is there in the landlord column, payment to landlord column 2,40,000. So directly you are recording to bank account. To bank account 2,40,000. No other adjustment. You are closing the book of account 2,40,000. Fourth year, by royalty account. Royalty account. What is there in the landlord column? See, 2,40,000. Fourth year, 2,40,000. Analysis table, check. Fourth year, 2,40,000. To bank account, 2,40,000. Okay, you are closing the fourth year. 2,40,000. 2,40,000. Fifth year, by royalty account. Royalty account 2,87,500. To bank account 2,87,500. Closing the account. That's it. Landlord account is done. 2,87,500. So what we have done? First we have prepared the analysis table. Then after that, royalty account we have prepared. In the royalty account, we have debited the landlord account and we have credited the production account, and amount whatever there in the royalty column, that has been recorded in the royalty account. And when short working is recovered, that short working account will be debited, that whatever there in the short working column, that is recovered amount we have shown. Okay. Then we have prepared the short working account. When short working occurred, we have debited the landlord account, and the balance we have carried on and brought down. When the short working is recovered, then we credited the royalty account, and whatever recovery amount is there, that amount will be shown, and the balancing figure we got is tallied with the analysis table. Then at the end, we have prepared the landlord account. It is very easy. I'm telling you, it's once you practice, it will be easy for you, and you should understand and practice. See, you should know concept why you are debiting, why you are crediting. If example, if you take now somewhere we are not taking the royalty whatever recovered, so you will get confusion, right? Here you have debited, so here you will credit, right? That you will do. If you know it is an asset, that is why we have debited, and it is an adjustment to the debit, that is why it is not an income, so we are not crediting. If you know this concept, you will not make mistake. That is what you should know while solving the problem. Understand the concepts, it will be very easy. Okay, I hope you all understood. And if you want any particular problem, give me in the comment section, or any questions, any year question you want me to solve, mention in the comment sections. I will solve those questions. Thank you for watching. Have a great day.